Hey everyone, it's Alicia Cooper, Miss Cooper Home Loans, Alicia Cooper Wells. I wanted to hop on here to hopefully get some engagement today, but I understand it's 3:30 and you're probably at work. May not be able to hop on this live, but I have some answers to your questions surrounding getting a mortgage. So right now, what I'm doing is I am sitting in the car because we decided to sell a property. It's being sold to a first-time home buyer, so it's super exciting to be a part of her journey. And the property is a distressed, or was a distressed property. So we specialize in renovating distressed properties, and one of the things with distressed properties is it may be cut off from the water source. So right now we're waiting for a water meter to be installed. But as a first-time home buyer, I want to first encourage anyone out there who's been on the sideline to let you know you can do it. You can buy a house. But I also want to be realistic with you that buying a house is a journey. It's not the simplest process, and I don't care how much you have everything put together so you think the process of buying a house is work. But if you're ready for the work, I'm ready to help you get across the finish line and try to make it as smooth as possible for you. But I wanted to talk about what does that look like, because what makes the home buying process often the scariest part of buying a house is the unknown, the process of buying a house. So many people don't know what it takes in order to buy a house. Like, how do my finances need to look? That's the number one question I get. You know why? Because I am a mortgage lender. So, even that part of the journey, right? You get to connect first, hopefully, with a mortgage lender, but you may have started with a real estate agent. And once your real estate agent, talks to you, lets you know what's going on, then they will connect you with a lender, or you can take action into your own hands and start with the lender first. I encourage everyone to start with the lender first because it's important to understand how much house you could actually qualify for. So let's talk about what happens when you go out with your real estate agent. You go out with first you're going to usually talk with them. You may have seen a property that you're interested in, and you're going to call them and say, hey, I want to buy this house. So most good realtors will say, oh, that's awesome. I would love to help you see that house, but give a call to my preferred mortgage lender, and then we can see what you're pre-qualified for or pre-approved for. Now, a pre-qualification is different than a pre-approval. A pre-qualification is usually when a lender will take verbal information from you and qualify you simply on that verbal information. So what your credit score might be, what your income is, and that's good, but what really helps the process and helps you be more confident in the process is actually having a pre-approval. Now, a pre-approval does not have to take long. It can be very quick to get a pre-approval. This is the list of documents that we're going to need in order to help you get a pre-approval same day. So the first thing we want to have is income documentation. So income documentation comes in the form of your two most recent pay stubs, your two most recent W-2s, and your two most recent tax returns. So those are the three things that we're usually looking at when it comes to income. And you may be asking, well, why do you need all of that, right? So the pay stubs lets us know what you're currently making, what you got going on right at this current moment. The W-2s allow us to see from which employers you have been working with the last 2 years, and if you've been working with the same employer for the last 2 years, we're able to average out any income that may be irregular, such as overtime, shift differentials, these are the things that we're looking at. And then the tax return will tell us a story. Often in the tax return, we'll know whether or not, do you have a LLC? Do you own other real estate? Do you owe taxes? Your dependents, your current address, your previous address. So the tax return will give us a full story about you. Now, if you've been with the same employer for the last 2 years or been W-2 for the last 2 years, we may even be able to qualify you, and you don't own any other real estate without even needing your tax returns. So we may only need your 2 most recent pay stubs and your 2 most recent W-2s. This, again, is the income documentation. Now, on the pay stubs, what we're usually looking at on those pay stubs, if you're nervous, are your hours regular? Are you hourly or are you salary? Is your work that you do, is it seasonal? Also, we're looking to see about deductions. Do you have any child support, alimony, separation maintenance, any garnishments that's being taken out of your check? That's what we're really looking for when it comes to the pay stubs. So if you are self-employed, those income documentation, you may not have. You may not have pay stubs. You may not have W-2s. So we may need to ask for different things if you're self-employed versus someone who has a W-2 job. So if you are self-employed, things that we may ask for is definitely the two most recent years of tax returns, and we may ask you for a year-to-date P&L, profit and loss statement, so we can see how your income is flowing in at this current time. Now, once we look at the income, the second thing we're going to be looking at when it came to that list of documentation is going to be your bank statements, your 2 most recent bank statements. Now, the bank statements are for us to see what the source and is going to be for your down payment and closing costs. So if you are using a 401k statement, you can give us that too. Even if the funds aren't actually coming from your 401k, we would still love for you to give us that, because this gives you what's known as reserves, a cushion. So like if life shows up, it lets us know that, hey, I have some money here if an unexpected life arises. Now, with the 401k, we may need a letter or we may need proof of how much is vested. That means how much is available to you if you needed to withdraw from your 401k. The 401k can help make the file very strong, especially if you have not had consistent income or have had credit issues in the past. Or you may just need to be able to take from the 401k to use for your down payment or closing costs for your house. So we got income, we got cash, how much money you have, and then with the income, we were looking at the capacity, right? We'll look at your debt to income ratio based on the debts on your credit report, and child support, alimony, separation maintenance, and taxes are usually 4 things that we will look at beyond what is listed on your credit report. So if you're nervous about us, looking at your income or your bank statements, like what are we looking for? We don't care how you're spending your money. We're not going through your bank statement, combing through that way. We're really just looking to see the source of the funds, where the money's coming from, and how much is available for you to use for your down payment and your closing costs. And if you have money for reserves. Now, credit. This is the part that scares most people. And I want you to know you should not be afraid of your credit. If you're afraid of your credit, first, take a deep breath. It's not going to beat you up, okay? It can't fight. And neither can the credit bureaus. So you have a right to fix your credit, to clean up your credit, and to work on your credit to improve your financial picture of how it looks to other people. Because it may not be telling a true story about who you are today. It could be telling a story about you in the past. But if you don't go to fix it or take a look at the credit, guess what? That's going to keep telling that story of who you used to be opposed to who you are today. So there's a lot of things on the credit report that could be holding you back. And we're not just talking about looking at on-time payments yet. The first thing is your credit report should not be your resume. So we shouldn't have all of your employers on your credit report that you've ever had. Same thing goes with addresses. If you don't live there, get that off of there. These are things that you can do to potentially improve your credit score, and it doesn't even have anything to do with payment history, utilization, and it's often overlooked. It also, because of the world we live in with technology, it may be tying you to people, to places, and things that you have nothing to do with. Now, once you take a look at your credit, the simplest way, if you're afraid to have a lender look at it first, you can look at your credit now every single week. It is completely for free through annualcreditreport.com. Yes, annualcreditreport.com. Now, with annualcreditreport.com, the downside is it's not going to give you a credit score, but it is going to give you the most accurate information in regards to your credit report. You're going to be able to see addresses, name variations, as inquiries, and your creditors. Now, what you're going to be looking at when it comes to those creditors. For us to qualify you for a loan, we're only going to be looking at your minimum payment. So if you're making more than your minimum payment, we're not going to count that against your debt to income ratio. We're only going to be looking at the minimum payment listed on your credit report. Also, when it comes to looking at your credit report, we are going to be looking at collections and charge-offs. But we view collections and charge-offs completely different. Every collection is not the same. Every charge-off is not the same. And it also can make a difference on what loan program or product you're qualifying for. So when it comes to an FHA loan, if you have charge-offs and it says charge-off on the credit report, we're not even looking at that. We're not going to ask you to pay it. Throw that out the window. If you have collections, if you have a medical collection, we're going to throw those out the window too. But other collections, phone bills, unpaid furniture, student loans, we're going to be looking at those collections there. So again, this is why it's important to have a knowledgeable, experienced loan officer take a look at your credit report before you try to dive in, trying to fix up your credit so it can look all pretty before we see it. And it may be things on there that we don't even care about, that may not even be affecting your loan product or program based on what you qualify for. So when it comes to credit, many people are like, well, what's the minimum credit score? Credit score is such a small part of it. It is the overall credit picture. What is your credit saying about you? What is your credit saying about your character? So let me give you an example. If you have student loans, a car, a few medical collections, and a phone that went into collections, and let's say the phone bill is now been charged off. The medical collections are not looked at, right? And then your student loans, let's say you're not on a payment plan right now. With the student loans, we're going to use usually 0.5% of the overall balance against your debt to income ratio. Because most of us are not going to be able to stay on a 0% payment plan for 30 years, the entire time you have your mortgage. And also, we don't want you to have a surprise when you do have to start paying those student loans back and you're now having to make a mortgage payment. So we're going to give you that in the debt to income ratio, that expense in there. Now, you could have a 620 credit score with those collections, as I mentioned, one being charged off and the medical collections we're not looking at, and you can get a loan. FHA actually goes down to a 500. A 500 credit score. Now, if you're 500 to 580, you are required to put down a larger down payment, which is 10%. So many people will be looking at 580 or higher. Now, several of the down payment assistance programs need for you to have a credit score of 620 or higher. But there are still other options out there. And right now, under this current administration, guess what? There is a lot of down payment assistance out there, and there are a lot of ways to qualify for this down payment assistance. I mean, there's things, I'm be honest, that I had never even heard of before. Like the legacy products. If you are the first person to buy a home in your family, looking at your grandparents and parents, there's down payment assistance for you, like in New Jersey. It's money out there. There's money out there based on maybe where you're willing to live. Now, as a mortgage lender, I cannot say, hey, buy a house in this neighborhood because you get money. I don't do that. I don't think that's right, because I don't want to steer you or have red line you to a certain area. I want you to pick the area you want to live in, and we can see how we can help you get there. And don't be afraid to buy a starter home. But let me get off that tangent real quick. Let me jump back into the credit. So when we're looking at the credit, we're looking at the picture. We want to be able to tell a story. So going back to the scenario I mentioned, the medical collection and the charge-off, we are going to need to write what's known as a letter of explanation. And we need to explain to the underwriter why it happened. So you may have a collection with an old phone bill and, hey, I was 19 years old when I opened that line. I thought my cousins and I were going to pay the bill, and we didn't. And I have rectified that since then, and we're going to include what the solution is. Now, you may not have rectified it, and we're still going to just explain to the underwriter what the solution can be. Now, medical collections, we're going to explain what happened. Hey, I got hurt, I slipped, I fell, got in a car accident. Whatever that may be, we're going to explain it. Working with a lender like me, we have the manual underwrite option, which means that it's not just about the automated system. We have an underwriter that's going to actually review these letters to support the file on why you deserve a home. So we talked about cash, we talked about credit, we talked about your debt to income ratio and capacity, your job, your income statements. And this all can be summed up. You don't have to have all of that memorized. Your 2 most recent pay stubs, your 2 most recent tax returns, 2 most recent W-2s, 2 most recent bank statements, and allowing us to take a look at your credit. You can do this all online. And then we're going to actually look through the documentation. We're going to give you a call and say, hey, if we're missing anything, and we're going to help you put together a plan based on what you're pre-approved for. I'm going to ask you a question that I know many lenders don't ask, is what is a comfortable mortgage payment for you? This is a little bit different than just pre-approving you for your max amount. I'll still let you know what your max amount is, but I'd like to help you stay in your home. And there's a lot of expenses that aren't listed on your credit report. Gas, electric, childcare, which you're still going to have to pay once you get into this house. So that's why I asked you that question on what's a comfortable payment for you. And then based on a comfortable payment, we're going to start being able to look at what's collateral properties. You're going to go out with your real estate agent, and there's going to be some things that can affect that payment. So it's, again, a pre-approval. So the things that can affect the payment: the purchase price, the property taxes, the homeowner's insurance, and based on how much you're putting down, what your mortgage insurance is going to be. These are the factors that make up a payment, as well as a homeowners association due, a condominium fee, that can play a part as well. So just because you're looking to buy a condo that may be less expensive, but it may have a large condo fee, it may be harder to qualify. So this is why I'm begging you to allow an experienced mortgage lender to take a look at your file. because that's a lot of information to memorize. That's a lot of information to figure out. And we're trained to help you get across the finish line. Yes, it may be more legwork than you want to do on the front end, but I'm telling you, this is the time to start making that decision that we're going to do the work on the front end opposed to doing it on the back end. But I want to help you get into the home that you want to be in. I am someone sharing my personal story that I started with a starter home. I started with several starter homes. I had 3 houses before the house I live in now. And, you know, I do realize that a lot of people overlook the starter home because they've witnessed individuals buy a home and they were unable to get out of that house. So they're like, hey, I got to buy the best first. And it does take a level of financial discipline to be able to move up. You know, it's not just about getting a bigger job. It's about keeping that debt to income ratio together as well. Now, some of the things that you can do is when you buy your new house, it doesn't mean you automatically have to go out and get a new car payment. And definitely don't get the car payment before getting the house. I know it sounds crazy. Let me figure out how to work with a car payment. But that can eat up a lot of your purchasing power and may not allow you to get into the neighborhood, house, school district that you want to live in. Well, I hope this information helps you. I hope it helps you get off the sideline and see what you're pre-approved for. Let's just start there. You don't have to go out at houses. It doesn't mean you have to commit. And it doesn't cost you anything to apply. We can start with a soft credit pull so you don't have to worry about you having the frustrations of a hard inquiry pulling your score down. I'm telling you, you deserve a home. I want you to do a little math with me. Take your phone out if you're listening to this. And I want you to put in your phone $1,500. Pull out your calculator, type in $1,500. And then I want you to type in 60. That's 5 years, 60 months. 1,500 times 60 is $90,000. That's how much you're going to pay towards somebody else's mortgage if you don't start putting together a plan on you buying a house to have your own. Now, there's perks to having a mortgage. You're like, perks? Yes, there's perks to having a mortgage. Number one, you show to creditors, it's not necessarily right all the time, that you're more responsible. You also find that insurance rates may go down. And if you are a business owner, there are certain loan products out there that may not even lend to you unless you own a property. Again, this doesn't have to be your forever home. This can be the first home you start with. And right now is a good time to see where you're at, as these mortgage rates have cooled down some from where they were before. And you can get in the game. Get ready now, because if rates do fall lower, I'm promising you there will be more competition in the market, and that usually equals that home prices are going to keep going up. But wouldn't it be better for home prices to go up after you buy your house so that you can enjoy the benefits of having equity? Well, I hope you take this serious. I hope you hear my sincerity that I really want to help you get across the finish line. And I also want to get this money to you. We got money to lend. All right. Well, my name is Alicia Cooper Wells. I'm known as Miss Cooper Home Loans. I'm a wife, a mother, a serial entrepreneur. And part of that is me being a loan officer to help you get into your home that you want. So whether you're looking to buy your home sweet home, or even if you're looking to buy a property for profit, I can help you. My email is acooper@MissCooperHomeLoans. And you can also shoot me a message via the DM, and we will schedule a time that we can talk and even walk through it together. You don't have to do this journey alone unless you want to. All right. Have a wonderful day.